Dear friends, welcome to Weekly View on Markets. Markets show a kind of consolidation as valuation has fallen to historical average. Market may bottom out soon as a further fall will attract buying due to attractive valuations. News from war zone and oil prices are the main drivers of the markets in the short term. Considering the valuation of the market, it is good time for long-term investors to accumulate quality stocks. Mutual fund investors should continue their SIP investments and should not stop SIP or exit at this level. Markets have always given better returns in 1 year after each crisis and correction. Let us look at market levels during this week. Nifty has closed at 22,713, lost 106 points, that is 0.47%. Bank Nifty closed at 51,548 with a loss of 420 points, that was correction of 1.39%. Mid cap index lost 0.78%, that is 1,654 points. It is closed at 53,677. Small cap index consolidated with 30 points gain. It closed at 15,650, that is 0.20%. India VIX has come down by around 4.78%. India VIX is at 25.52. Most of the sectors were in the red during this week. Few sectors like information technology, metals, defense have gained. Information technology has gained around 3%. Remaining all sectors like media, reality, energy, oil and gas have managed to end in the green with small gains. Healthcare sector, pharma were the major losers as the news report has come that US is likely to impose 100% tariff on branded medicines. Because of that, there was big correction in pharma and healthcare stocks. Manufacturing, consumer durables, NBFCs, PSU banks, private banks, auto sector, infrastructure all lost between 1 to 2%. FMCG sector lost about 0.42%. Remaining all sectors were consolidating during this week. Let us look at technical charts. This is the chart of Nifty index. We can see that Nifty index has support as shown by the lower trend line. The support is at 22,000 levels and it has got resistance at 24,000 level. So mainly the news from the war zone is likely to dominate the market in the coming week. This is the chart of Nifty mid cap index. Mid cap index has closed at the support levels of around 52,000 levels. From here, the news from the war zone will decide the further movements in market. And Nifty mid cap index has got a resistance at around 55,500 levels. If this resistance is taken out, then we will have a technically positive view on mid cap index. This is the chart of Nifty small cap index. Small cap index has to come back to the downtrending channel. That means it has to cross 16,000 levels. After that only there will be some positive news on small cap index. Having said that, small cap index has undergone a huge correction from the historical high of around 19,600 level. It had dropped to around below 16,000 level. So it is good time to look at quality small cap stocks with good earnings growth for long term investment. This is the chart of Bank Nifty index. Bank Nifty index also has fallen from around 61,500 levels to 50,250 levels, and if it drops further, 49,500 looks good support. The news from the war zone will determine the market direction. Now let us look at some of the fundamental parameters of the markets. RBI foreign exchange reserves has come down by 10.3 billion US dollars in this week. It is at 688.1 billion dollars for the weekend. Foreign exchange rate, after touching a high of 95.8, it has come down sharply. It is at 93 rupees 10 paise for $1. Dollar index is steady at 100.13. Brent crude price, after hitting a high of $115 per barrel, it is at $109.24 per barrel. Still the crude prices are very high. Crude prices along with rupee depreciation and also the RBI reserves coming down, all these things are going to put pressure on Indian economy in the coming weeks, and high oil prices will have an inflationary effect on Indian economy. Gold price is at 1,49,650 for 10 grams 24 carat. Gold prices have corrected from around 1,60,000 levels. RBI is going to have bi-monthly policy meeting in first week of April, and considering the geopolitical situation and also the high oil prices and inflation, RBI is not likely to cut interest rate in this policy meeting. FIIs continue to sell. They have sold 29,425 crore in equity during this week. DIIs bought 29,273 crore in equity during this week. So DIIs are almost matching FII selling. That is how we don't see big fall in the market because of this. Market valuation has come down to the historical average. Nifty PE is at around 19. And if we look back, whenever Nifty PE comes below 19, bounce back quickly whenever it touched 19 PE or below that. Because of this, I am advising investors with a long-term view to pick good quality stocks, as market valuations from here on with further correction will become attractive. News from war zone and oil prices are the main price for the market in the short term. Any dip is a good investing opportunity. Mutual fund investors should continue their SIPs. They get the cost averaging as the market keeps falling. So they will get good returns. And cost averaging will be the advantage. So this is all for this week. If you like my channel, please subscribe to my YouTube channel. You can refer to your friends. You can ask your questions, which I will reply. Thank you.